just got an update on economic activity in Nigeria this morning. The S&P Stanbic-IBTC Purchasing Manager Index for August has just come out. We've seen steady growth in the economy in the last few months. Just out, growth in the Nigerian private sector continued to gain momentum in August as customer demand improved and inflationary pressures softened. At 54.2, the headline PMI was an expansion for the 9th month running, signaling sustained improvement in the health of the Nigerian private sector. The latest reading was up from 54.0 in July. Just like I said, another driver of high output was the waning inflationary pressures observed midway through the third quarter. The pace of increase in purchase prices slowed for the fourth consecutive month and was the weakest since March 2020. According to Miwa Oni, head of equity research, industries should start contributing more to real GDP growth from 2025 amid the structural shift introduced into the sector by the operations of Dangote Refinery. Also, the rebased Nigerian economy is on track to grow by 3.5% year-on-year in 2025 from 3.4% year-on-year growth in 2024, supported by the softer inflation, improvement in FX liquidity conditions, and structural reforms. Miwa Oni also added that the continued moderation of input and output prices suggests that inflation is likely to remain soft in the near term and could incentivize the MPC of the central bank, that's the Monetary Policy Committee, to switch to an accommodative monetary policy stance by September from the current neutral stance. Analysts also are still digesting outcomes of a rebasing of the Nigeria GDP data from 2019 to 2024, which led to the 2024 GDP rebased up by 34.3% under the new 2019 base year. The sectors affected included human health and social services, which leaped 298.1%, arts, entertainment and recreation up 266%, trade jumped 84%, all reflecting a reassessment of their contributions to the economy. Also, agriculture was up by 70.8% and real estate was up 154%, all seeing significant increase in their size. Major sectors that saw a decline included construction, which was down 28.2%, mining and quarrying down 16.4%, and manufacturing also down 13.9%. Hello, this is Global Business Insights, where we make sense of the context by sharing insights and thoughts on how developments could affect business all over the world. China's factory activity contracted in August, marking 5 consecutive months of decline, despite an extended trade truce between the US and China. China's PMI in the manufacturing sector rose from 49.3 in July to 49.4 in August, and indicating the decline slowed from the previous month. For PMI data, as you know, 50 marks the cutoff between expansion and contraction. Pressures on China include from a property sector downturn to a rise in the jobless rate, also with enduring floods from torrential seasonal rains disrupting business activity in parts of the country. Lower economic activity in China has implications for demand for oil and other goods, weighing on price of commodities, for example. But China is not in any way relaxing on its oars. Prime Minister Narendra Modi and Chinese President Xi Jinping agreed just on Sunday to find ways to improve trade ties amid global tariff uncertainty and what must look like a need for a strong response to offset Trump's trade policies. Modi is in China for the first time in 7 years to attend a 2-day Shanghai Cooperation Organisation summit in Tianjin, along with Russian President Vladimir Putin and leaders from Iran, Pakistan, and 4 Central Asian states, in a show of global South solidarity. Mr. Putin had said ahead of the summit that the meeting would help shape a fairer multipolar world order. The trend of more South-South cooperation intensifies also as Nigeria and Brazil look to strengthen ties for cooperation. And in Indonesia, President Prabowo Subianto said on Sunday, in a bid to calm anti-government protests, that political parties have agreed to slash lawmakers' perks. Cost of living protests began last week over unbearable hardships on citizens amid what protesters described as excessive pay and housing allowances for parliamentarians, also escalating into riots on Friday after a motorcyclist was killed during police action at a protest site. In Jakarta, the capital, protesters reportedly hurled Molotov cocktails and firecrackers at police headquarters and looted the home of Indonesia's finance minister. As inequality escalates in emerging economies, especially Africa, to avert similar situations, governments are best advised to be proactive in being compassionate and advancing initiatives to ease financial pressures and cutting waste, visible extravagance and perks of politicians. And of course, we do know that instability and social chaos imply major economic costs and will weigh on the already tepid economic outlook faced by most emerging and developing economies. Let's go to the UK, where the country has secured its largest warship deal from Norway. The UK beat international rivals as Oslo and London move to deepen defense ties in the face of increasing Russian aggression in the Arctic and North Atlantic. The UK Ministry of Defence says the deal is worth £10 billion to the British economy, with Norway purchasing at least 5 British Type 26 frigates built in Glasgow by BAE Systems. The defence sector has certainly benefited from the increasingly complex geopolitical environment. This week we'll see new tests in the US economy after the long Labor Day holiday, as we get fresh data providing insights on key developments like chances of a Federal Open Market Committee FOMC rate cut. On Friday, the US jobs report will perhaps confirm or not an interest rate cut at the FOMC's next meeting if jobs growth continues to be weak. Economists see a 75,000 increase in non-farm payrolls, 2,000 more than in July, with unemployment expected to tick up to 4.3% from 4.2%. Powell described the current labor market as unusual in that it sees low jobs growth and muted layoffs, effectively keeping unemployment rate low. Indeed, expectations for multiple interest rate cuts in the coming months have buoyed risk assets and sentiment. Last week, the S&P 500 notched its 19th and 20th record closes before giving back some of those gains on Friday to end the week down 0.1%. Other economic data this week from the US include the Institute for Supply Management's Manufacturing PMI tomorrow and Services Purchasing Managers Index on Thursday. Also, we get job openings and labor turnover survey data on Wednesday. All this as a decision on Fed Governor Lisa Cook in terms of keeping her job may also be decided as another court decided that most of the new US tariffs that Trump imposed are illegal, with an appeal to be heard at a higher court later. But a stock market rally has already concluded that tariffs won't lead to too much inflation, but all the uncertainty is certainly unhelpful. U.S. Trade Representative Jamieson Greer said on Sunday that the administration is continuing its talks with trading partners despite the ruling that most tariffs are illegal. And back to Africa, Finance Minister Ahmed Kushuk said on Saturday that Egypt's real gross domestic product grew by 4.5% in the 2024 to 2025 fiscal year, 2025 financial year, up from 2.4% the previous year. This was due to reforms tied to IMF financing and increased manufacturing activity amid economic pressures from a currency devaluation, high inflation, and the impact of the crisis in Gaza. UK August manufacturing still in contraction at 47.0. The sector continued to face tough operating environment with weak market conditions, tariff uncertainties, and downbeat client confidence, all contributing to a sharp drop in new order intakes. The downturn in production volumes extended into its 10th successive month. Still in the UK, house prices fell 0.1% in August, contrary to expectations of a 0.1% rise, with average prices now at £271,079. July's price change was revised down to a 0.5% rise. Export powerhouses, Japan, South Korea, and Taiwan, also manufacturing activity shrink in August, according to the latest PMI data out today, underscoring the challenge Asia faces in weathering the hit from sharply higher trade barriers erected by the US. In Europe, Greece and Spain led factory growth, while manufacturing in Germany, the bloc's largest economy, shrank, albeit at a slower pace. The EU and the US struck a framework trade deal in July, but only the baseline tariff of 15% has so far been implemented. Eurozone factory output growth hit a 41-month high in August, with the HCLB Hamburg Commercial Bank Eurozone Manufacturing PMI at 50.7, driven by improved new order intakes. Shell and Impact Africa have criticized pressure groups for potentially halting oil and gas exploration in South Africa, citing lost investment and benefits. Still in South Africa, the South African Post Office stopped parcel deliveries to the US after Trump's removal of an exemption on packages worth under $800. Asia Pacific stocks were mostly lower, awaiting US jobs data for rate cut clues, while US markets were closed today for Labor Day holidays. Oil prices remained range-bound, with Brent crude at $67.36. That was an early trading per barrel, and WTI 0.2% lower due to supply concerns and US tariff impacts. Hong Kong listed shares of Alibaba Group Holdings surged over 18% today due to strong income helped by sales at its cloud computing unit and a continued revival of its e-commerce business. Revenue rose 2% year-on-year, coming in at 247.65 billion Chinese yuan. That's about $34.6 billion, missing estimates of 252.9 billion yuan. Net income was up 78% at 43.11 billion yuan. That's about $6.02 billion, much higher than expected. The strong increase in profit was also due to gains in some of its equity investments and the disposal of Turkish e-commerce firm Trendyol, which offset the decrease in income from operations. South Korea's exports slowed more than expected in August, rising 1.3% year-over-year, with US-bound shipments declining sharply due to high tariffs. Well, that's all we can take on this episode of Global Business Insights. This is Bode of Shosami. Thanks for watching. Bye for now.